Okay, so today we're going to be talking about expansionary monetary policy. So, what is expansionary monetary policy? This is a policy when the U.S. Federal Reserve or the banking system, basically what they do is they expand their monetary supply, typically in times of recession or in times when the supply is needed to increase. This is when the Federal Reserve would step in and the banks would then the Federal Reserve Bank would then supply the markets with money. So how does it work? So here we have a graph of aggregate demand and then the long run aggregate supply. What happens with expansionary monetary policy when aggregate demand is low, the Federal Reserve will step in, and when they add money into the markets, then the aggregate demand will shift to the right, thus increasing this aggregate demand. So another representation is here's where the equilibrium is before with the interest rate, and then quantity very low, price level is low, interest rates low, everything's low, and then when the Federal Reserve adds money in, that's then when the aggregate demand will increase. So what are some effects of expansionary monetary policy? So here is just roughly a graph of the Dow Jones Industrial Average in the last 6 months, and coronavirus is a perfect example of how expansionary monetary policy comes into play, because with coronavirus the market crashed here in about March 20th was the low point of Dow Jones, and it was about at 18.9, roughly around there. So what happened then? Basically the markets crashed because of coronavirus. Businesses were closed, industries aren't making the same output as they can. Lots of hits are being taken to small and medium-sized businesses overall. So what happened is the Federal Reserve stepped in and they started printing money essentially. They conducted expansionary monetary policy. They added more money, giving out loans in private markets by buying securities and junk bonds to help prop up markets, and also giving out these loans and lines of credits to struggling industries so they could stay afloat. Another thing that the US government did was that they gave out the stimulus checks, which is also really big in helping out the economy, just try to stay afloat to help stimulate the economy so aggregate demand can increase and people can start buying things again. With this, however, the value of the dollar becomes inflated and less valuable because more money is being printed and it's just increasing nominally and not realistically. The nominal value increases but not the real value. So the value of the dollar is being inflated and decreasing, thus making commodities such as gold and silver and things of those nature more valuable. And that is basically the rundown of expansionary monetary policy and what's going on in the US economy today.